There's been a lot of discussion, certainly if you watch news conferences, threats for higher levels of tariffs, some threats for lower, some changes being made that have alleviated those threats. And there's been just a lot of information. So when you start talking about tariffs, I think a lot of people get confused. That and the fact that the tariff implementation, the actual implementation of tariffs, has only begun as of August 7th. So we're taping this on Monday, August 11th. So tariffs actually went into place at the end of the last business.
Well, not all of them, right? So we know that some tariffs went into effect, were pulled back, and then some were delayed until last week, right?
Yes. I think that and you and I are using this chart that I've borrowed from our friends at the BBC, because they've done a pretty good job of at least putting it into like I like this chart for two reasons. One, it has the current rates as of August 7th. And two, it actually shows you the share of U.S. imports. So, we think, and we have these conversations, I'm sure, in our regular, everyday life about, you walk into a store like Walmart or Target or wherever, and it's like everything comes from China. Well, not everything comes from China. About 13.4% of U.S. imports overall come from China. I think a lot of things that people would buy on the regular come from China. In fact, our number one trading partner is Mexico at 15.5%. Let me just roll through these numbers to get us going.
Well, I think, look, why don't we do this? Why don't we, the issue is we trade a lot with Mexico, China, and Canada.
Yep. They're the top three.
That's right. So like 40% of our imports are going to be taxed at a higher rate, right? 25% from Mexico, 30% China, 35% Canada. So it is a big deal. It is a big deal, and I hope I kind of summarized it. It's just, it's crazy. I think it's crazy. And if you want to get to the economic impact of all this stuff, the Yale Budget Lab estimates almost a point lower in terms of GDP, real GDP growth in 2020 this year. A lot less, hopefully next year. And then, a smaller economy essentially, by about $160 billion annually. Then you got,
just to pause you for a second. Now that's an estimate, and there are many estimates, and there certainly are people inside of the Trump administration, including Treasury Secretary Bissant, who said very specifically that he didn't agree with the Yale numbers. And I think that adds further confusion, is that, because there's so much assessment to be done around impact that it's I'm not saying that everybody's guessing here, but I mean these are estimates.
I think we should get to the economics in order to make sense of the estimates, right?
Sure. Let's go that direction.
So let's make sense of the economics. My big issue with the economics we hear coming out of the administration is that on one hand, they say we're going to get a ton of revenue, right? Well, on the other hand, right, we're going to get a ton of revenue. But what about the fact that you're basically saying at the same time, we're going to punish a lot of countries and see fewer imports, right? You can't have it both ways. Either the imports continue and you do get a ton of revenue, or you get lower imports and you get less revenue. That's it. That's my argument, is that, regardless of what the actual numbers are, because we could come up with different models that will say different things based on because models are just assumptions, right? But ultimately it has to be, the economic logic has to be consistent. And my problem is that we're not getting a lot of consistent economic logic coming out of both sides, to be totally honest with you, because I don't take sides. I speak economics only. And that's the problem, right? So we got to get to what are the economics? What is the mechanism through which you get this extra revenue?
Let me ask you this question. Who's going to be paying? When do you think, we get past the estimates? Because, tariffs are, yes, they've been on, they've been off. But the Trump administration has made a number of significant deals. India is also a larger trading partner. They represent only 2.7%. But again, I think it's going to be where consumers would see, a lot of things, typically in clothing and in other, like, I would say the basics, when would we start to really be able to make sense of what impact the tariff has and to whom?
Yeah, well, we can't just look at prices. Price growth was easing before the first tariff announcement.
Right.
Price growth is accelerating now. Prices of goods, certain goods that are goods that are expected to be impacted by tariffs are seeing price increases. I have Goldman Sachs basically went out with some numbers and said, look, core PCE is now 0.2% higher so far than it would otherwise have been in the absence of the tariffs, the first tariffs that were introduced. And so
that's just a pause. Because we're talking in code, that's personal consumption expenditures.
That's right.
So that's the stuff you buy.
That's the stuff you buy, mate. That's the stuff you buy. And then they went further. They said, look, if you just looked at the impact of the initial tariffs, U.S. consumers have absorbed only so far 22% of the tariff costs, right, through June. But that share is expected to increase to 67%, right? If we hold the same pattern, right, constant, right? And we don't know if it's going to stick because it changes every day. But if it sticks, right, we're going to start to feel that a little bit more. And ultimately that's the problem, right? Ultimately the problem is it amounts to a tax on households.
But one of the biggest challenges, I think, for Americans that are trying to interpret, tariffs, whether they're good or bad. If you own a business and you're doing business overseas with, one of these nations, and you've had to kind of play this sort of ping pong game through the negotiation.
Yeah.
That's been incredibly frustrating. Like I said, I just spoke to somebody over the weekend, who has a business, and he's like, he's just flabbergasted at how, this has worked out. And it's the guidance that he's had to seek to just interpret this.
That's right.
Has come at a cost to him and his business.
Let me add something here. The uncertainty the uncertainty causes your body to pause on all kinds of hiring and expansion decisions or anything.
100%.
100%. Who suffers?
Well, anybody associated with my buddy and his business.
Exactly.
And he's one of, I don't even want to throw a number on it, but it wouldn't be a small number.
Now imagine small businesses across America employ the most Americans.
Right. It's the backbone of American business is small business.
And so basically you have a labor market that is expected to slow. You have an unemployment rate expected to increase just because of the uncertainty, just the uncertainty alone. Right. And then when you so there's big investment disruption caused by the uncertainty surrounding the tariffs. And then we start adding up the actual cost, right? Maybe some businesses have been shielded. Some domestic businesses have been shielding. Well, what do those domestic businesses do? You know what they do, right? They raise their prices too. And when they raise their prices too, who pays it? Ultimately the consumer. And I think that's the problem. And so again, tariffs amount to a tax on consumers. That's the economics. And that tax, of course, when you tax things, you get less of them. You're taxing economic activity, you get less economic activity. And that's why real GDP is expected to grow at a slower pace. And, right. You see what I just did there is I gave you the mechanism through which you get lower economic growth. And that's it. I mean, regardless of whether you get a percentage point or you get 10 percentage points or 0.2 percentage points,
Sure.
You're going to get less economic growth and fewer jobs.
Well, and that's today's lesson from Dr. Orphe. And I appreciate your thoughts as always.